A4Everyone offers a proprietary analytical risk platform that supports health and life insurers to augment and streamline the work of underwriters. Their AI as a service and automation as a service solutions, delivered from their cloud-based platform, significantly make the work of the underwriters easier and increase their capacity and productivity. At DIA Primetime, they will present A4Insurance, an AI and machine learning-based solution that analyzes past data constantly and automatically evaluates the new offer flows, resulting in improved efficiency and shorter sales cycles for insurers. Great to have on DIA Primetime, A4Everyone.
Risto, welcome. A4E is an intriguing company name. Where does it stand for?
A4E stands for Analytics for Everyone.
So you're democratizing advanced data analytics?
Yes, our goal is to bring data science technology to any enterprise across the globe, despite the size. And our more specific proposal to our clients is automation of decisions and processes based on data.
How did you guys start with this?
It's an interesting story. 2 years ago, we met with Boostrat Health Insurance, a subsidiary of Vienna Insurance Group in Bulgaria. They described the following simple problem. Our business is growing with good 25% per year for the last 4 years in a row, but our underwriting process is struggling to catch up. We cannot extend our underwriters to infinity, so we have to automate.
And now you are here.
Yes, today, 2 years later, we are presenting to all dear guests of DIA our underwriting A4Insurance service. Automation of the underwriting processes for health insurance contracts. The service is using company information and offer details, historic data for the contract's performances such as claims, profit, losses, etc., and our machine learning platform.
Can you show us a bit of how that works?
Our services are delivered from cloud-based platform, and those are integrated with ERP systems of our clients. Every month, the service is analyzing the performance of thousands of contracts and millions of claims and build models. These models on each offer prepared from the sales evaluate the expected contract profitability and risks, putting the offer into 3 zones: accept, proceed with the contract sign-off; reject, the offer parameters should be revised; and gray, the offer needs underwriter revision. Being back office without user front end, our service is not easy to be presented. Still, we are going to show you the flow of the automation hidden behind. Let's see some actual data emulating the process that follows the normal business flow of the sales. You have a company data for your client collected initially. As you see the data here, it's pretty simple, including town of headquarters, company sector, employee amount, and is it past client to you or not, or is used some similar insurance elsewhere. Also, you need employee distribution across age, gender, town of operations if different from headquarters one. Group ID represents different groups of employees targeted to receive different coverage packages. Let's select some different companies. This big telecom has almost 2,000 employees in many towns and is already our client. This small company, Hyper Aspect, is just with 16 employees. The service is capable to predict very well the future outcome of the contract despite the size and the structure of the companies. Next step is preparation of the offer, where the sales prepare the main contract parameters such as GVP, target profitability, administrative expenses, etc. And some expected cost of prophylaxis if such is included into the package. The biggest part is the big amount of data regarding the details of the coverage, such as included options, limits, and all these drilled down by specific operations. Every end of business knows how much granularity could be presented here, but mainly the sales use templates and do amendments only if required. Here is an example with that company, Hyper Aspects. We see that one MRI scan is included as a part of the coverage. A4Insurance use all that information for the scoring process later. At that moment, information is passed into the A4E service. The scoring is done in a matter of seconds and the sales receive immediately the assessment. This offer for company Concord is scored pretty well with score of 513 and it's well into accept zone. The service is showing cutoffs of the zones as well. Everything below score 174 is reject and the accept zone is with scores above 295 and the green zone is in between. The score is generated from machine learning models. Also, we have forecasted expenses and expected profitability and profit. We have some easy calculations in regards to the administrative costs and commissions, but the real magic is behind the calculation of the expected claims. The calculation of that is done via machine learning algorithms again, that we learn from the previous contracts and forecast the cost of the medical procedure, drugs and materials, accounting even year-to-year inflation deflation trends. Before to go deeper into that, let's see what else we have here. We receive information per capita and we have how these expected parameters vary from the average contract of the past. The information allows us to understand as humans the scoring provided by the machine. As you see, the expected profitability of the offer for 4-feet company is pretty high, almost 50%, and almost top score of 911 points. We see also that the expected claims per capita are far below the average due to the structure of the employees, their age, gender, etc. So now we see quite an opposite offer assessment of my company. Very low score, negative expected profitability. Almost every parameter per capita is strongly negative. Very clear case that the offered GVP should be raised within at least 10% to achieve profitability, or the commission should be revised, or both. Finally, let's get into details. For that, I will use this big telecom. As you see, the score is into the gray zone. The system suggests this offer to be revised from underwriter. The score is close to green and we have expected good 6% profitability, but the expected deviation of the claims per capita are very high. Now we move to the details. Into the drill down of the expected claims, we see that the company expects coverage for almost every category, including even such like prophylaxis, pregnancies and birth. If we take a look at the employee structure, we understand why these high claims are expected due to the high amount of numbers of females, for example, in active fertile age. The machine learning model is assessing that the probabilities of pregnancy cannot be so accurately forecasted, and that uncertainty leads to that score. Even with high positive expected profitability, machine learning suggests human decision to be the final one. With that, I believe I've managed to show you the potential of the solution. I hope you see how this could automate the underwriting process.
What you just showed us is a great example of how data science could automate decisions in such a complex process as underwriting. Can you share a bit about the business case for your clients?
With 60% of the decisions not passing via underwriters, actually you increase the capacity of your resources with 2.5 times. You guarantee the quality of your contracts with unbiased decisions, but probably more important is that you speed up the decisions process for your best clients. If we put all this in 3 words, it's quality, efficiency and profitability.
Wow, a 2.5 increase in productivity, plus an increase in speed as well as quality. Definitely taps into the needs of many insurers. How can they contact you, Hristo?
Of course, just drop an email at hristo@a4everyone.com. Looking forward to hear from you.
Thanks, Hristo. Great work.